He knew every price pattern by heart. Head and shoulders, breakout traps, micro pullbacks. But there was one chart he never looked at, his own mind. And it cost him more than any losing trade ever did. You study the market endlessly. You mark supply zones. You label support levels. You highlight liquidity pools. Your charts look like a masterpiece of precision. Colors, lines, Fibonacci retracements. You know where price might bounce. You know where it might reverse. But let me ask you, where is your mind most likely to break? When do you usually freeze? When do you explode in revenge trades? Most traders think the enemy is out there in the market. But the greatest enemy lives inside your own mind. And the irony? You can chart this internal enemy just like you chart price action. You can spot recurring emotional patterns, document them, and build what Jared Tendler calls an emotional map. Because the patterns that destroy your P&L don't always start on your screen. They start in your head. Imagine your emotional landscape as a candlestick chart. Every emotional blow-up is a big red candle. Every moment of hesitation is a long lower wick. Every burst of overconfidence is a vertical green bar shooting toward the sky. We obsess about technical patterns, double tops, triple bottoms, flags, pennants. But our minds also have patterns. The sudden panic before pressing close. The euphoric rush after a win streak. The shame that lingers after a loss. These patterns repeat. And if you don't document them, they remain invisible saboteurs. In the mental game of trading, Jared Tendler says, your emotions are signals. Like price action, they provide information about underlying conditions. Yet most traders ignore them. They blame the market, the broker, the news, the Fed. When the real cause sits quietly behind your eyes, controlling your mouse click. Sam, a trader I worked with, knew every order block and imbalance on a 5-minute chart. But he kept violating his stops. Every time price flirted near his level, he panicked. What? Because he had a deep fear of being wrong. A belief rooted in childhood where mistakes were punished harshly. He never charted this fear. He never noticed that every losing trade was a wound to his identity, not just to his account. When he started documenting it, literally writing, I felt tightness in my chest as price neared my stop. He saw the real pattern emerge. He was not afraid of the market's movement. He was afraid of what being wrong meant about him. This awareness changed everything. He started seeing these emotional setups before they triggered sabotage. Just like anticipating a breakout trap, he learned to anticipate his internal traps. Most traders spend years looking for a holy grail indicator. They jump from one course to another. They blame poor results on strategy flaws, market makers, or algos hunting stops. But they never examine the one variable that never changes, themselves. You can switch brokers, systems, mentors, but if your mind remains uncharted, you will keep making the same mistakes. Some traders sabotage profitable systems because their self-image cannot handle success. Others hold on to losers because they fear letting go of hope. When you map these patterns, you finally see the true root causes. It is no longer, why did price do this to me? It becomes, what did I believe about this trade? What emotion did I ignore? The same way a price chart exposes hidden liquidity, your emotional map exposes hidden self-sabotage. How do you build this map? Step 1. Record every emotional reaction. After every trade, win or lose, note what you felt. Describe it clearly: anger, fear, overexcitement, boredom, revenge. Write it as if you're describing a trade setup. Step 2. Identify the trigger. What event or thought sparked this emotion? Did you see unrealized profit evaporating? Did a social media post make you feel inadequate? Did you break your rules? Step 3. Note the outcome. Did you overtrade? Did you hesitate and miss an entry? Did you close early? Did you revenge trade? Step 4. Create patterns. Just like price patterns, you'll start noticing emotional patterns. You feel fear when trade approaches stop loss. You feel euphoria after a big win and over-leverage the next trade. You hold losers hoping they will come back. Step 5. Pre-plan responses. Once you spot the pattern, design a pre-planned action. If I feel panic when price nears my stop, I will step away for 2 minutes before touching the keyboard. If I feel the urge to over-leverage after a win, I will reduce position size to minimum for the next trade. This is how you create your mental risk management plan. You might think, I don't need all this journaling. I'll just follow my system. But here's the reality. In missed opportunities, you skip good setups because you're afraid of being wrong again. Blown accounts. You over-leverage trying to get it back after a loss. Chronic underperformance. You trade small out of fear even when your edge is strong. Burnout. Emotional exhaustion from constant self-sabotage. The cost is not just financial. It's psychological. Your confidence erodes. Your trust in your process vanishes. You start questioning your ability to ever succeed. Traders who don't map their minds often end up quitting. Not because they lacked skill, but because they never developed self-awareness. Imagine ignoring the chart and trading blindly. No levels. No context. No trend lines. Just random buys and sells. It would be suicide, right? Yet this is exactly what most traders do with their mind. They operate blindly, ignoring internal levels, emotional limits, trend lines, emotional tendencies, and liquidity zones, hidden psychological triggers. Once you see this, it becomes obvious. Mapping your mind isn't optional. It's as essential as mapping price. Most traders think the edge is in their system. But true professional traders know, the ultimate edge is in self-mastery. A mediocre system with a disciplined, self-aware trader can outperform the best system in the world with an undisciplined mind. Your meta edge is knowing when your mind is hijacking your strategy, knowing when to step back, knowing how to reset emotionally. This edge makes you anti-fragile. You thrive even under chaos. Example 1, the fund manager who lost millions. A fund manager with a decade of experience saw an opportunity during a market crash. His system signaled a major short. But he had just suffered a personal loss at home, a family tragedy. He ignored his mental state and pressed the short position aggressively. It initially worked. Then he over-leveraged, convinced he was in sync with the market. His judgment was clouded by grief, masked as intuition. When the reversal came, he hesitated. He doubled down instead of cutting. Result? A $10 million loss and forced resignation. The lesson: even professionals collapse without mapping mental states. Example 2, the amateur scalper. A young scalper, Sam, hit a streak of small losses. Instead of stepping back, he started revenge trading. He increased size to win it all back quickly. What? His hidden emotional map had a core belief: I am worthless if I lose. That belief triggered panic, revenge, and eventual blow-up. Only after seeing this pattern in his journaling did he start to break the cycle. When you finally map your emotions, something remarkable happens. You no longer fear emotions, you see them as data. You don't over-identify with losses. They become feedback, not identity wounds. You regain control over the only thing you can truly control, yourself. Instead of fearing fear, you anticipate it. Instead of fighting tilt, you manage it preemptively. You become a trader who acts from a place of clarity rather than reaction. One daily emotional journal. Every trading day, regardless of outcome. Log. Major emotional spikes. Physical sensations, tightness, shaking, sweaty palms. Thoughts that arose. Resulting behaviors. 2 weekly pattern review. At the end of the week, review your emotional logs like you'd review price charts. What recurring setups do you see? What emotional support and resistance levels keep breaking? Where do you consistently slip? 3 trigger map creation. Make a diagram mapping. Triggers, events or thoughts. Emotions felt. Typical behavior. Outcome. Use arrows and flowcharts. The clearer, the better. 4 plan countermeasures. For each pattern, design a specific corrective behavior. Deep breathing. Walk away for 5 minutes. Automatic size reduction. Predefined script reminders. 5 accountability check. If possible, share your emotional map with a trading buddy or coach. Accountability increases follow-through. What's beautiful is this skill spills into your personal life. When you map your mental game in trading, you become more emotionally resilient at home. You become a better decision maker under stress. You handle conflicts with more patience and clarity. The self-mastery you build doesn't stay on the chart. It strengthens your relationships, health, and overall life satisfaction. This is the real treasure most traders overlook. The journey is never just about money, it's about becoming the kind of person who deserves the money. You can't control the market. You can't control volatility, macro events, or random news shocks. But you can control your preparation. You can control how well you know your internal landscape. When you chart your mind like you chart price, you unlock the final frontier of trading mastery. If you truly want to scale, not just your account but your personal growth, start now. Pick up a pen. Start your first emotional journal entry today. Track it like your most important chart. Because the ultimate trade isn't just in the market. It's in winning against yourself.